Hey everyone, Mark Boyer here from Boyer Financial with Jason Jacoby, my son-in-law. Married my third daughter, Melissa. I can't believe I let you marry Melissa.
I can't believe you did either.
I know. So what's up? Now we're working together, having a blast here at Boyer Financial. Hey, hope you all had a good week. Let's do a little recap, Jason. So what are some of the highlights you think this week from the markets and the economy and so forth?
And I think as we talked about in last week's video is the AI gold rush, right? It's kind of on, it's pumping.
Crazy.
NASDAQ up over 2% this week. I mean, led the way again. It's quite crazy. NVDA, almost 25% increase in market value this week. I think they're approaching $1 trillion now in market capitalization.
Just over it, yep.
Right?
Yeah. No, it's crazy. So it was a big week, big moves on the NASDAQ. You know, it's interesting, technically, we broke out a couple of weeks ago, honestly, on the NASDAQ. That growth side has really been working this year. NASDAQ had a lot of ground to make up from last year because it got hammered, but came back strong this year, especially in that AI space and semiconductors, anything to do with it. So it's really, really interesting. And so with that breakout, you know, you get technical factors where fear of missing out, so you get people chasing and so forth. So anyway, that's why the NASDAQ's up so high. It's really interesting. But on a broader scale, the markets, I mean, the S&P's up strong, 8-9% this week, I think. And then, but the Dow actually had a down week.
Yeah,
so that's
1%.
Kind of crazy, right? So interesting. So it's sort of a tale of two different markets right now.
Yeah.
But today it closed at 4,200, right on the S&P, which is higher close than it's been for quite a while. So that actually is going to be interesting going into after Memorial Day to see how the markets react. We need more breadth.
Yeah.
We need more stocks to participate. We need the small caps to work. Still, they're kind of struggling.
Yeah.
And I'd love to see transports show a little bit more strength in the economy. But yeah, good week overall.
Good week overall. Obviously, we had some big inflation numbers. The Fed's main inflation gauge came out actually this morning, Friday morning. Personal consumption expenditure report. So we look back last month, measuring the month prior to. So what are we, May now? So the April report measuring March. It was up 4.5% 2 months ago. This past month, up 4.7% year over year, dating back to last year. So a little bit hotter. Again, inflation's a little bit stickier than normal. So, what's the Fed going to do at this point, right? What are we thinking?
Well, the market thinks the Fed's done, I think, especially on the growth side, because that's why it's part of the other side of not only technically we have some momentum to the upside, but also, I think the market thinks there's going to be cuts, maybe as much as a 1% cut later in the year. I don't think that's going to happen. In fact, I wouldn't be surprised if we get another 25 basis points off of these numbers and then a pause. And I don't know, Frank. I don't really think that they're going to cut rates until next year.
I agree. Yeah, I agree with that. And then that's obviously at this point with investors in the markets, it's showing with the growth, again, outperforming the dividend payers, the value side of things, which we've talked about last week. But as soon as investors realize, oh my gosh, maybe they're going to raise rates a little bit more, maybe they are going to not cut rates like you talked about by the end of the year. That could spell even more headwinds for growth style equities. It's more expensive to do business. It's harder to borrow. There's less borrowing going on. Look at commercial real estate at this point.
Yeah.
I mean, there's different sectors that are starting to crack. Banking thing we just went through. So it is to be seen. And then it's obviously going to play back into the dividend payers, the more companies with stable earnings, ironclad balance sheets, low debt. Those companies I think will thrive in a more volatile or uncertain market, or even higher interest rate market that we haven't been accustomed to the last decade. Right? It's been free money.
It's been free money, and dividend payers haven't really been rewarded for quite a while. And but if you go back to the 80s, 70s, 80s, when inflation was this high, you'll see that companies that were paying dividends, the dividend was a larger part of total return in those years than it has been recently. So we're looking for that to return, especially in this kind of new economy, new to you because you're so young, but not new to an old guy like me, where we actually had much higher rates years ago, and market still can go up. I mean, it's not like it just crushes everything. It's just there's an adjustment that takes place. And so, I think it's critical to stay balanced in this portfolio. And not to lose sight. I mean, you can chase returns. If you've been in more conservative portfolios at the moment, you're like, wow, how come I'm not making money? I'm going to move to growth. Well, be careful, because that's when you might might be the last one to do that.
Show up to the party late.
Yeah,
Yep.
so you got there late, and so stick with the balanced portfolio. You'll be okay. It's like anything in sports or whatever. I mean,
Yeah.
there's certain things you do that are working at a time, and then
When it doesn't,
there's an adjustment that makes them by the defense. Then you got to go back to something else, and so
Yeah.
that's just how this works. So we're able to kind of balanced portfolios, able to make moves in any direction that way. So I think it's really important.
I like it. So last thing, really want to quickly touch on is balance. We talk about balance, all weather, diversification. So balanced, are you saying like balanced as in we should have 50-50 value to growth oriented equities? Are we talking balance in terms of kind of briefly what you mentioned, like, hey, diversification as a whole, some people might have 20% growth and 60% more value, safer equity type, portfolios, right? That's
Depends on, absolutely, but it depends on your age
Right.
and your timing. There's lots of reasons. Like if you're, 80 years old in retirement, you still, I mean, we want to make we want to, you want to. It's good to make money, and you want to make money, but at the same time, the risk factor there is
Right.
way too high for you. So, I think it's important to, based on just your circumstances. That's why we try to create portfolios that are unique to a particular person's
Love it. Okay, great.
situation. So that's
Love it.
critical.
Great.
So,
Well, thanks so much for joining us this week. We'll be back with you after the long holiday weekend. Just again, want to remember everyone that's given their lives for our great country, all the freedoms that we enjoy today.
yeah.
So celebrate with your families, but remember, most importantly, I think
Hey, we
that's
live in a
the
great country. I know
Yeah.
there's a lot of voices out there talking about this. This is the greatest country that's ever that God's ever put on this earth. And yeah, do we have problems? Absolutely.
Absolutely.
But man, the men and women who have given their lives for this country to give us the freedoms we have today, that's what Memorial Weekend's all about. So
Yep.
you all have a great weekend with your loved ones, and thank God for all that He's done for this amazing place.
Amen.
Have a good one. God bless you guys.
See you next week.